£1.58 sterling.
Now for more on finance, we're joined by Rod North, Executive Director at Bourse Communications. Rod, good morning.
Good morning.
Now, look, the share markets closed down yesterday. How's it travelling generally?
Well, it's actually ended the quarter on quite a high. In fact, up 10% for the quarter, which is the highest level recorded since 2009. So that's been a very positive result. And, of course, the share market has been sort of edging up quite significantly over the last few months, which is pretty much indicating, I think, that we're seeing, because we've got historically low interest rates, we are seeing money moving out of cash into shares and into property, which generally happens because the return on cash is not that good at the moment, as I'm sure everyone appreciates. So that's created a much more sort of powerful share market, and I suppose the backdrop against that is that you know, some companies have put in some pretty good results, and I think there's been sort of more confidence that I think that's come into the share market as well as a result of, you know, that reporting season of a few months ago. So I think that sets the scene pretty well for the market, you know, to continue to increase. But of course, we have a big sort of dark cloud of uncertainty at the moment with what's happening in the US, and obviously there could be some fairly significant ramifications in the Australian market for that, because the markets don't like uncertainty. And of course, you know, the Dow's off quite significantly last night. Our market sort of fell in anticipation of that. Where we've seen that you know, the US is not being able to resolve you know, and pass the budget at the moment on healthcare.
Now, Rod, we just mentioned that Bloomberg did a survey of 33 economists. Were you one of them that says that the rate cut won't happen? Yeah,
I don't think we're going to see a rate cut today. I think the Reserve Bank is just being a bit more cautious and watching you know, data that's coming out. Obviously, the retail sales figures that will come out today will be fairly critical. The market's expecting a small increase of 0.4%, but if, for example, that turned out to be a negative, you know, that would be something the Reserve Bank will need to, you know, take into consideration. There's still expectation, though, and again, it depends on what happens in the world scene, what happens with the US, what happens with particularly that debt ceiling in the US at $16.4 trillion. That's looking as if it's needing to go up. But there will be a big issue over that in a couple of weeks' time as to whether that's going to occur. And that sort of backdrop, you know, for Australia, you know, could have some fairly significant ramifications, particularly for our dollar, which puts the Reserve Bank in a bit of an invidious position for the next meeting in November, where perhaps there might be some pressure to lower the cash rate another 25 basis points then.
OK, so you're thinking November would be
I'm thinking November we'll get another 25 basis points decrease.
So you are anticipating at least one cut before the end of the year?
One cut more, which will bring the cash rate down to 2.25%, which will be, you know, one of the lowest levels we've seen in something like 60 years.
Rod, good to see you this morning. Thanks so much for that.